let's get into it. So now we're going to talk about the world of forex trading, like what is involved, what are the main assets that are traded out there. So in this section, I'm going to be defining most of the important aspects of trading. I'm going to be covering indices, what is a share, what is a CFD, and the rest. So in 1929, the United States stock market suffered a crash, more or less what we're experiencing now due to the coronavirus. But the one in 1929 was very devastating, and it's still considered the most devastating in history. Most investors lost enormous amounts of wealth, but not Joseph Kennedy. He had sold all the stock he owned the day before the crash started. Legend says that he made the decision shortly after a shoeshine boy tried to give him stock advice. Back then, the stock market was considered a place only for the rich and powerful. So Kennedy thought that if a shoeshine boy could be trading stocks, something must have gone wrong. That's why he had to sell all the stocks that he owned. But nowadays, everyone could own and trade a stock. You don't have to have a personal broker or a vast fortune of money to do so. Anyone, any layman out there can participate in the market. The market has become more accessible than ever, but that doesn't mean you should take trading lightly. In this course, I will introduce you to all the tools required to become a successful trader. So what is Forex? Right? Forex is a short for foreign exchange. So this is a decentralized global market where all of the world's currencies are traded. Each forex trade involves two currencies because you are betting on the value of one currency against another. In the Euro USD, which is a currency pair, Euro USD, we are going to elaborate further as we go on. The most traded currency pair in the world, the euro is the best currency. So it means in this pair, the euro is your best currency, and the US dollar, which is the second currency in the pair, is the quoted currency. So what does this mean? If the price of Euro USD pair is at $12, it means that for every 1 euro, it's equal to $1.12. If, for example, the number increases, that means the euro is getting stronger in relation to the dollar. That means euro is powerful if the $12 increases. As the market is open 24 hours a day, 5.5 days a week, it has become more extremely liquid over time. What I mean by liquid is there's more money now traded in the forex market. Per day, we are looking at about 5 trillion that is traded in the currency market. Trades can be closed within minutes of opening, as well as be held for months. And due to the size of the market, even players as large as banks can't easily manipulate price. They are driven only by supply and demand. Mainly supply and demand moves the market. Of all that has led Forex to become the favorite place for many traders. So here is more aspects about what is Forex. So it is the largest financial market in the world with a volume of over 5 trillion per day. That is a lot of liquid. That is a lot of money in the market. Referred to as Forex or retail FX or FX or spot FX or just spot. So it depends with where you are in the world. Most people, they refer Forex trading as Forex or just retail Forex or spot FX. In comparison to NYSE, which is New York Stock Exchange, which trades around 28 billion a day. So you can see in comparison, the Forex market is way bigger. It is more liquid than the New York Stock Exchange on its own. It's about 3 times larger than all the stock markets in the world combined, meaning it's liquid, very liquid. So it's things that you have to know. So now, what is a CFD? A CFD basically means a contract for difference, known as CFD. It enables traders to speculate on the rising and falling prices without owning the underlying asset. This is possible through a contract between a client and a broker that does not involve an actual Forex, stock, or commodity exchange. There are several significant advantages that have led CFDs becoming immensely popular in recent years. Number 1, CFDs offer high leverage than traditional trading, which means greater potential profits from smaller investments. That's why you have seen the rise of retail traders. It's because of higher leverage. Of course, increased leverage can also bring bigger losses, so you need to be very careful. Number 2, CFD trading also allows assets to be shorted at any time. While certain markets either prohibit shorting or have different margin requirements compared to long position, this is possible because with CFD, there's no additional cost for the broker. The negative side of CFD trading is having to pay the spread, which discards the potential to profit from minor price movements, which means it's quite expensive to trade what? CFDs. Now, what is a commodity? A commodity is a raw material used in commerce. Commonly traded products are gold, oil, natural gas, silver, copper, coffee, and wheat, just to name a few examples. These are commodities. The fundamental principle is that all commodities of the same grade are interchangeable with other products of the same category, regardless of who produce it. Investors buy and sell commodities through futures contracts. The minimum quantity is defined by the exchange. For example, one oil contract might include 50 barrels. The trade also determines what grades of oil can be used to satisfy the contract. All oil that fits the requirements will be sold for the same price, no matter who produced it. That's why you see we've got an umbrella or a one price for oil. Like right now, oil is going for like $30 a barrel. Of course, it has dropped down because of issues between Russia and OPEC and also the coronavirus. So it will be sold for the same price. Now, what is an index? Traders need to monitor the conditions of the market, as it is too complicated to track every single security in the market or even in a market sector. Financial specialists have started to combine individually traded stocks into indexes. For example, BP is quoted separately but is also included in the oil and gas index. Each index is calculated in a slightly different way, but its value represents a weighted average of the current values of its component stocks. For instance, the Dow Jones Industrial Average, which is an index, has stocks from 30 of the most significant companies in the United States. Meanwhile, the S&P 500 index comprises of 500 of the most widely traded companies in the United States. As the S&P 500 is more diverse, it can give a better representation of the condition of the US stock market as a whole. If you are looking into the markets in the past week or 3 weeks, you would have noticed that S&P 500 has dropped massively. It has dropped massively, meaning it has lost ground, it has lost value. This in turn means the companies in the United States, they're not doing so well. This is because of the coronavirus, which is just an example. So besides the Dow Jones and the S&P 500, some widely traded indices are the FTSE 100, which is from the London Stock Exchange. Then you've got the DAX 30 from Frankfurt. Then we've got the Hang Seng from Hong Kong. We've got the Nikkei 225 from Tokyo, Japan. Then we've got the Shanghai Composite. So indexes, they can also be traded, but they're also a bit expensive to trade. So you need to really weigh your options. You need to know how much equity you're gonna need. Yes, they pay very well, but they're quite pricey to trade. Now, what is a share? A share, also known as stocks, are the unit of investments in individual companies. When a company is listed on an exchange, it issues a fixed number of shares that represent the value of a certain percentage of the company. Each of those shares has a nominal value, but after the launch, they start being traded at the market price. It will increase or decrease depending on the demand, which in turn driven by the attractiveness of the company to the investors. Some widely traded stocks are Apple, Google, Amazon, Facebook, Alibaba, and Tesla. That's just to name a few stocks. So basically, you're going to be encountering most of these as we go deeper into trading. So this is like just an introduction of what you are getting into, because you have to know all these terms. So in the next section, we are going to cover up further topics for this beginners course. So I'll see you in the next section. Thank you.